Welcome back, everyone, and a special thank you to the Warriors who have been here since 8:30, and they've been just terrific all day, lots of sessions. Congratulations to all of you who've spent the whole day watching, or even if you've just watched a few sessions. Well, now we're into a session that's probably one of the most important topics of today because it actually touches upon every single other session, and it's about cyber insurance. And historically, it's been one of the most attended sessions, which is why we like to put it at the end to try to keep everyone going. And we've got a terrific panel that we really mixed in some insurance experts and some legal experts from every side. Starting off, we have Jennifer Coughlin, who is the Steve Jobs of incident response. She is a partner and the founder of Mullen, Coughlin, a law firm exclusively dedicated to cyber. What makes Jennifer a cyber expert is not just her extraordinary experience providing first-party breach response and third-party privacy defense legal services, but it's also that cyber-related work is all her law firm does. Jennifer is an extraordinary success and should be an inspiration for any of the newer practitioners in the field of IR at just how far your expertise can take you if you have the will. As for the panel, Jennifer not only takes a lot of insurance-related work, she is also a former claims counsel at Travelers. And her story would make, to me, a great Hollywood movie. With thousands of data breaches or investigations under her belt, 4-year-old Mullen Coughlin now has 71 lawyers. So welcome, Jennifer, and congratulations on everything you've achieved.
Thanks,
And
John.
next up is Scott Goddess, co-chair of the firm's Data Security and Privacy and Insurance Recovery and Counseling groups at Thornburg, where Scott has helped insured recover more than $1 billion in cases. For cyber insurance, what does that mean? Who decide not to pay? It means Scott Goddess is the John Rambo of cyber insurance battles. Or should I say John Rambo? Rambo is the Scott Goddess of guerrilla warfare. Scott has perfected his cyber insurance practice into an art form. And what makes him an expert is not just that he has filed 2 landmark appeals on behalf of insured against insurance companies who denied charges, both in the 11th Circuit on behalf of the insured after a data breach incident. One he won and one he settled, which is not disclosed. But to me, he won both. But it's also that Scott handled these cases from start to finish. And what do I mean by that? He didn't pass either case along to one of his appellant specialist colleagues. He did the appellant argument himself. And I just love that because, like so many of the panelists here, Scott's skill sets stretch across multiple disciplines. So welcome, Scott. Thanks for being here.
Thanks, John. Always a pleasure.
Excellent. And the next 2 speakers are just so great to have on this panel. And we did this with the ransomware conference. We'd never done it before, where we get real insurance industry people who are right smack in the middle of cyber insurance to talk about these things, real experts. And we have 2 different types. First up is Jeremy Gittler, the practice leader and head of Cyber Americas at AXA XL, the first of 2 actual cyber insurance professionals, like I said. And what makes Jeremy ideal for this panel is not just that he is a cyber insurance expert who can evaluate and guide companies with their coverage in the ever-changing and complex world of cyber insurance, and a former AIG senior complex claim director in the area of cyber. But what also stands out regarding Jeremy is at least what sounds, at least to me, like a new kind of insurance service, which happens after the fact, where Jeremy and his team coordinate and implement data breach and crisis management services for AXA XL customers that have suffered a data breach attack, suffered a cyber attack. And I think that's something that's evolved over time. And I'm really very much impressed with that. Clearly, Jeremy has seen it all from a very unique lens, and we are thrilled that he could share his viewpoints with all of us today. So
Thank you, John.
Jeremy.
Appreciate it.
Excellent. Welcome. And last up is my friend Michael Phillips, Chief Claims Officer at Resilience, which is a insurance company that only does cyber insurance. He's the Jennifer Coughlin of cyber insurance, helping clients manage insurance during the entire life cycle of a data breach. And he is, like many of the lawyers here, a serious entrepreneur. His value proposition is not just as an experienced cyber insurance expert who also worked managing claims at Allianz and Beasley, who specialize in pre-breach services, but he's also a key player, perhaps the most key player in something like a ransomware response, in helping assess the threat, not just on whether payment will work, but also whether payment will result in a prison term for the payers of the ransom, because they may have violated what was discussed in the previous panel, the OFAC panel. So not an easy role to play, but Michael, he loves it. And he's really at the top of his game. He presently co-chairs the ransomware task force of the Institute for Science and Technology, which will at some point be issuing some very, very important recommendations about ransomware, and is taking on the fight against ransomware like no other entity has ever done. So I can't wait to read what they come out with. And I'm also so glad you were here, Michael. So glad to have you.
Oh,
and then,
thank you. Very generous, John. Thank you.
Excellent. And then our next speaker is going to be on by telephone for some technical reasons. And his name is Sean Hoar. He's chair of the data privacy and cybersecurity practice at Brisbois. What makes Sean great for this panel is not just that he has earned every cyber certification there is, so that when Sean is done advising a client on the legal issues involved in a data breach, he can then conduct a certified data security audit. But Sean not only once served as the lead cyber attorney for the U.S. Attorney's Office in Oregon, he also currently founded and serves as the executive director of the Financial Crimes and Digital Evidence Foundation, teaching federal investigators about cybercrime, digital forensics, electronic evidence. So Sean is way more than just an IR lawyer. He's also got strong technical chops. Welcome, Sean. Hope all is A-okay. Are you in Oregon?
Yes, sir. Thank you very much. Appreciate it.
Excellent. Okay, well, I'm going to turn it over to the one and only Jennifer Coughlin and have her take this last panel home and bring us all home. One more time, I want to thank Bruce for an amazing job, but I want to thank especially the people in the audience, the registrants who are still here all day having and ready to take on this panel. Very grateful to all of you. Thanks.
Great. Thanks, John. Hi, everybody. And again, kudos to everyone who has lasted the entire day. This has been a great conference, great content, great presenters. Thank you to Bruce and John for putting it on. So last session of the day is with us, and we are talking about data security incidents and cyber insurance. And cyber insurance is an integral part, and I think my panelists would agree, to preparing for and responding to the inevitable data privacy event. But what I'd like to first do is level set and talk through exactly what cyber insurance is, because we have standalone policies, we have policies with endorsements, and then we have what is known as silent cyber. So Jeremy, why don't you kick it off by talking to us about standalone cyber policies? What do you typically see covered in those policies, things like that? I'll turn it over to you.
Sure, thanks, Jen, I appreciate it. So let me just level set and start off with saying that what cyber insurance is not. We're not the geek squad. The purpose of this insurance is not to fix your broken computer. Essentially, the reason for this insurance stems from the data breach notification laws. And so what we're here to do is to determine what information was exfiltrated and who do you need to tell about it. And from there, the policy has morphed into several other coverages that have been deemed necessary over the years. So the cyber policy has a first-party aspect to it and a third-party aspect to it. So for the first party, we start with the data breach response costs, and that stems from the exfiltration of information and what needs to be done about it. So we would pay for a forensics firm to make a determination as to what information was stolen, an attorney to make a determination as to what legal obligations that company has, notification costs, should that be deemed necessary under the data breach notification laws, a call center, should there be people who want to find out, why they were notified in terms of their personal information being breached, credit monitoring, and public relations. So that's really the core of the policy. But then there's extras that are added on. And so we have cyber extortion and ransomware, which obviously everyone, has read about in the newspapers, and that's fueling probably the purchase of the policy these days. And we're going to get into ransomware a little bit more later. We have data recovery, which is fees to recover data that has been stolen from your backups, business interruption, extra expense. And then there's the third-party coverages. After everything occurs in terms of trying to mitigate the breach, there could be lawsuits involved. We live in a litigious society, as we know. So there's the privacy and security wrongful act coverage, which is essentially a suit, which is failure to protect your confidential information. That could be by customers, employees, whoever. And then there's the privacy regulatory defense, which is essentially any governmental action that is brought against the company. And then there's numerous endorsements that have been added on. And that's based upon, over the years, companies have come to their carriers and said, we need coverage for this, we need coverage for this. and the insurance carriers are there to provide, what is needed by our insured. So some examples of that are unauthorized collection, voluntary shutdown, payment card industry, system failure, contingent bodily injury or property damage, social engineering, financial fraud, dependent business interruption, or bricking, which is essentially a term for when all of your hardware doesn't work anymore. We would pay for the replacement costs. So that's essentially what we're covering in a cyber policy. We also do cover tech, and media, but that's for another panel. And the last point I just want to make is, really, I think what separates cyber from any other line is what we really are providing, aside from money, is a service. In other lines, it's essentially lawsuits. And so companies get sued all the time. A lawyer is retained, you go through the lawsuit, and your carrier pays for the attorney or the settlement. But this is really about the service more than anything else. You come into work, there's a skull and crossbones on your computer, the company is completely shut down. What are you going to do? Absolute panic. And so we are there. We should be your first phone call, and we are there to work with you to get you through this, to introduce you to the proper attorney, the proper forensics firm, and be, really be there to partner with you. We want to not just be a payer, we want to be a partner with you.
Great. And Michael, I know there are some policies out there that it's not a standalone cyber policy, but there may be some endorsements that cover some of the fees and costs associated with responding to a data privacy incident. Can you talk to that?
Sure. So I just want to amplify what Jeremy has said. So the standalone market has really evolved over the years to cover, all of the imaginable costs, losses, and liabilities that can arise out of a cybersecurity event. But we also see underwriters in other lines of insurance try to offer some piece of that coverage and bolt it onto another kind of policy, like a property policy or a CGL, a commercial general liability policy. There, what we see are endorsements that may be labeled as cyber, but they don't cover all of the things that Jeremy was just describing. So they may cover only the breach response costs of an appointed attorney or a forensic investigator, or they may only provide liability coverage in the event of a data breach and litigation. Or they may cover certain types of crime losses, the social engineering loss or something like that. And that market has not evolved in the same ways that where Jeremy and I tend to work, where we're trying to cover the, sort of the whole gamut with a comprehensive cyber policy. And so when I read a lot of the commentary about the cyber insurance market and what it does or does not cover, oftentimes there's misconceptions on the basis of this standalone affirmative marketplace versus the collection of endorsements that companies may otherwise purchase.
Great. And Scott, silent cyber. Everybody's talking about it. What is it?
So that's the idea that you can get coverage for data privacy or cybersecurity-based losses outside of a quote-unquote cyber insurance policy. And so how does that come about? Well, it comes about in pretty much every claim. I mean, years ago, I would do presentations about this, and people would say, you're crazy, and underwriters and brokers say, you're taking food out of my mouth, why are you talking about this? And then invariably, every time I would get a claim that I always thought was a cyber claim, I would get on the phone with an adjuster, and I would say, okay, well, what are we going to do about this? And they say, we really think this is an errors and omissions claim. Or have you, and I've even gotten letters saying, have you checked with your general liability policy to see if there's coverage there? After everyone under the sun told me there's no such thing as general liability coverage for a data breach. So it means, is there an opportunity for overlapping coverage that as outside counsel or as the policyholders, people should be paying attention to? The answer is yes. And I will get calls from claim adjusters who say, this is not under my policy. So I had one where it was a business email compromise, and I call up the cyber carrier and they said, we really think this is an errors and omissions claim. You should talk with the other carrier. So I call up the other carrier and I said, hey, let's talk about this. They said, we really think this is a cyber claim. You should talk with the other carrier. And I said, that's funny because I just had that conversation. And so there is authority on the books that talks about other policies providing coverage when underwriters or they're more particularly stated, their outside coverage counsel say, that's not what we meant to cover. There are opportunities there. And when do you use it? when the limits won't be enough under your regular now I'm saying regular cyber insurance policy, maybe if you don't have a cyber insurance policy. But here's the rub. When it comes to insurance, the industry puts you on your heels in terms of timing. Because in a perfect world, a company would have cyber insurance, they would pay everything and be undisputed, there'd be no need for coverage counsel, and you wouldn't have to worry about other policies. But the way insurance works is that you're obligated to give notice, the carriers will tell you, right from the first minute. So you're obligated, the carriers will tell you, to tell every carrier you can think of about the claim as soon as it comes in, about the loss, as soon as you even think that it's happening. So a best practice is to think about, would crime cover this? Would errors and omissions cover this? Would general liability cover this? Would other policies such as KRE, kidnap, ransom, and extortion, cover the claim in addition to the cyber insurance policy? You might say, well, that's overkill. I don't need all that. I've got $50 million of cyber insurance. But if it turns out that part of the claim is not covered, or you blow through those limits, and you didn't notify the other carriers right at the beginning, you can expect that carriers' coverage counsel say, well, late notice, it otherwise would be covered, but too bad, so sad for you.
So is your recommendation that if an organization experiences a cyber event, they should work with their broker and tender notice to all the carriers that they may have policies with that may be responsive?
Far and wide, yes. And you will get comments from people, risk managers, in-house counsel, otherwise we don't need to do that. My premiums will go up. I'll get dropped as a policyholder. You can address those situations, but if you don't give notice, I've addressed many situations which carriers say late notice means no coverage, even if it otherwise was a covered claim.
So question from the audience, and I will kick it over to Michael first and then Jeremy. Where does coverage for fraudulent wires or ACH debits fit into the coverages? So we usually see this in a BEC, a business email compromise. So Michael, why don't you tell us, if we have a BEC and it results in a fake invoice being sent and money being wired to a fraudulent bank account, who's stepping in to provide coverage to the organization?
Well, this is one of the scenarios where it is very important to be working with your broker and understand the coverage in advance for a couple of reasons. First, the forensic investigation may source the quote unquote cause of the deception either in-house at the insured or at a third party like a client or a vendor, which could have a basis there. Second, the law on the liability around deception is often unsettled. So is it the payee who was deceived that sends the money away to the criminal actor at fault, or was the firm that was ultimately hacked by the evidence of the factual investigation at fault? And so the sensitivities around that are incredible and fact specific. And I'd say that the cyber market is also responding to that in different ways. So some cyber policies will have a purely first party e-crime, well, I'll call it an e-crime coverage, where they say, if you are deceived, you, the insured, are deceived and send money out as a result of a business email compromise, there will be coverage for that. But that does not, in that case, necessarily mean that there'd be coverage if it's the client who was deceived trying to send money in. So, tracking these endorsements that we were discussing about earlier, making sure you have the most comprehensive policy that will deal with each of these scenarios in advance, obviously gives you the maximal protection. But this is an area that I grant the question's momentum. This is an area of development, both from a product perspective and of course the law.
Jeremy, anything to add?
Yeah, I would just say this is a perfect example of the growth of the product. And so it's generally a coverage that's provided via endorsement because it's not really the core of the policy. At the end of the day, it's a crime. It's a high-tech robbery. And if we think about the purpose of data breach insurance, again, what information was stolen? Who do we need to tell about? It's not a perfect fit, but because of the fact that it's happening so often now, we've seen a lot of companies and municipalities asking for it, and it's a coverage that's regularly provided via endorsement because it's necessary. It's our job to provide to the industry what people need, and this is certainly something that's needed.
Great.
Jennifer, can I weigh in on that one for a moment?
Absolutely.
So the first place to look, well, the first two places to look are cyber insurance and crime insurance. A lot of cyber insurance policies, if it's the sort of loss where your company or your client sent out money to fraudsters, there might be an endorsement to a cyber insurance policy. They're typically not part of the standard terms, although with newer policies, it's always worth looking. Crime insurance policy is the first place to look for that. Again, cyber insurance would be second, kind of almost the exact same time. Crime insurance has computer fraud coverage that courts have ruled, including including the Second, Sixth Circuits, saying it's covered. There's social engineering fraud coverage that's baked in. If it's a situation where your client was fooled and is now facing liability because of it, again, cyber insurance and defending against those claims is a place to look. But beware for carriers saying that they get to open a trapdoor underneath you with exclusions for transfer of money or funds or otherwise. Again, crime insurance is another place to look, but that's an area where if you're advising people who are buying to look far and wide for endorsements for invoice manipulation fraud, social engineering fraud, and anything else you could think of with a synonymous name.
Great. So Jeremy, you mentioned growth of products. That's a great segue into a discussion on market penetration. So cyber insurance, standalone cyber insurance sounds like a great way to shift risk that many, if not all organizations have. So how many organizations that should have cyber insurance actually have cyber insurance? Jeremy, you want to kick that one off?
Sure, thanks. So we don't know the exact number of market penetration, but our best guess is at this point it's about 35%. And frankly, it's still very low. I've personally been in cyber insurance since 2006. It's now 2021. You would think it would be much higher than that. But cyber to me is a fancy marketing word, but at the end of the day, it's computer insurance and everything is computerized now. So when we lived in a time, if you think of a doctor's office and everyone's records is on a piece of paper, in a file cabinet, you probably don't need cyber insurance, although that would still be a breach as well, as you know. But, now that everything is computerized, to me, it would seem it's absolutely imperative that you would have to have computer insurance or cyber insurance. And so, I think obviously the more breaches we read about in the newspapers, it's going to fuel the need for insurance. And, if you're a company, you have to think about where do you put your money? Do you put it into increased, network security? Do you put it into insurance? Do you do both? Where does the money go? Certainly you don't want a situation where you have no network security whatsoever, but you just rely on your cyber insurance, or you don't want to completely rely on your network security because anyone can be breached. And so, really you need both. And again, I harken back to what I noted earlier is the service we're providing. That's another thing. It's, not all our insureds are very large, sophisticated companies that have, a risk manager and a huge legal department and an IT department to, they might not need us for the service as others will. A lot of our insureds are very, very small mom and pop shops, small municipalities, a police department. They don't have the resources to get through the breach. And for them, it's absolutely imperative that, that they receive the service that we provide. And so, again, the number could be a little off, but about 35%. And I don't see any scenario where it doesn't just keep going up. I mean, there was a time in life where there was no EPL insurance, or, a few people had it, and there was no D&O insurance. And now everybody has D&O or EPL. And so I think at some point it's gotta get close to 100%. It's absolutely necessary. Especially with all the regulatory activity and the fact that, governmental entities are so interested in how companies are storing data, securing it, and certainly if there's an incident, are they notifying people of it? It's just absolutely imperative that you have to have it. And a lot of times also a company can go out of business, because they don't have the insurance. So, you think about your homeowner's insurance. If a beam, in your house falls on somebody and severely injures them, the odds of that happening are pretty slim, but I don't have, $2 million to pay for the lawsuit should I get sued. So it's kind of that as well. It's a necessity because you literally could go out of business. What if you have a $3 million ransomware claim? And so to me, it's very irresponsible should there ever be a company or municipality that doesn't have cyber insurance.
Yeah, I think the risk of going out of business is real to organizations, and I pulled some numbers for the presentation. So last year we had 3,500 matters come into Mullen Coughlin. So data privacy incidents, needing legal counsel, sometimes needing forensic investigations, sometimes needing to pay a ransom. The average legal fee was $22,000, but we had a few that were several $100,000. The average forensic spend on a matter was $135,000. And for ransoms, I'm not going to give exact number of how much was paid by our clients, but we had some as low as $2,000. We had one that was $8 million. We had one that was $10 million. So imagine footing the bill for the cost to respond to a data privacy incident without having coverage to back you, to cover the cost, but also give you the plan, give you the strategy and the resources that you need to respond to it compliantly, efficiently, timely. Michael, penetration. So we talked to Jeremy about market penetration. What about growth? It sounds like we've got some room for growth and lots of organizations still need cyber insurance.
Well, so Jeremy's right. The firms of all sizes are squeezed in multiple directions, the regulatory environment, the spike in cybercrime, and the rush to digitize. Every firm is reliant on their computers and their IT systems. Everyone's a tech company now. Internationally, it's the same issue, is that we see that despite projections of, golden roads as far as the eye can see and mass adoption by the year 2024, growth is modest, but it's also up against these trends of these exacerbating losses. So when we look at international sort of market penetration, we see, maybe less than what Jeremy said, 35%. Our best guess internationally is a little lower than that. And maybe that has something to do with the fact that in the US, we've had a longer history of data privacy liability laws on the books from California all the way across the country, whereas the GDPR in 2018 it has just come into force, and the liability, the litigation is not as robust yet. But certainly from an operational perspective, some of the coverages that Jeremy was outlining around business interruption, data recovery, just as viable, just as valuable to a large enterprise that's operating globally, even if they're not particularly worried about being sued in Central Europe. So, we're pushing for growth, of course, and in an environment in which we've got greater and greater losses because of the ransomware epidemic and otherwise.
Yeah, and I think that's a good point, because just based on the numbers that I threw out, the attackers are active, the attacks are sophisticated, and the cost to respond are climbing. So what is currently in policies may not be in policies in the future. So what type of changes are you seeing to the coverages offered and exclusions, and in particular, the war exclusion?
Sure. So, I'm going to predict that this year there will be substantial changes to the war exclusions that are commonly found in both cyber insurance policies that we sell on to our firms, but also to our reinsurance policies that we pass on to our reinsurance partners, all the way up, because the rise in cybercrime and in sophisticated attacks, as we've heard from some of the national security experts on prior panels, is a substantial problem, and we need to right size what is an insurable risk to what is an insurable risk in 2021. So that I do think that we'll see changes there. I'd be interested in my co-panelists' view on the topic, but I think that's likely.
Coverage Counsel Scott, what are your thoughts?
Well, I hope that the market doesn't get worse. And with the more of a need for the insurance, it'd be a shame if there was less of it available. But that being said, I know that the market is tightening. I know that clients are facing increased premiums, and I know of carriers that are talking about more restrictive terms. And so places where there was expansion in terms of terms, let's hope that that there are carriers that are willing to write the coverage that the companies need, because this is the challenge, is that when you need it the most is when it's the most difficult to get it. And I like what Jeremy was saying, is that we're trying to offer products that people need. So let's hope that the market continues to do so.
So one of the questions from the audience members, if paying ransoms became illegal, what would the impact be on the cyber insurance market? Michael, leader of the task force, what are your thoughts?
Well, if I'll speak personally for this one, and if I thought that would solve the problem, making it illegal, then I'd be all for it. But I don't think it would. And secondly, if it was illegal, we're talking about less claims paid, right? So if for all of you who are skeptics of the insurance market, you would think, what is this guy Michael talking about here? Fundamentally, the coverages that we offer, including data recovery, business interruption, bringing to bear all of these extraordinary experts like Sean and like Jennifer, we're putting firms that are in their crisis in the best possible position to evaluate every option short of paying a ransom. Uninsured clients may not have that opportunity because they don't know where to turn and they're in that crisis. So, when Jeremy talks about us providing an essential service, I echo that 100%. So if the payment itself was illegal to pay, we would still be doing that exact same work, and the policy would still be bringing tremendous value to its clients. That's my view.
So Jeremy, you talked about all the different types of coverages that are included in the cyber insurance policy, but all of that is reactive to when an organization experiences an event. So I have to believe that the cyber insurance industry is considering what they can do and what they can provide before an event happens to their insureds, to their clients, to better prepare them for responding to an event. Can you talk more to the pre-event offerings that may be out in the space?
Sure. And if I could just make a quick point on the ransomware, I just think it's an important point because the insurance company, I think, gets a bad rap in terms of fueling this. Point number one, as I mentioned, there's 35% market penetration. So that means 65% potentially of ransoms paid have nothing to do with insurance. Second of all, I don't see it as we're fueling an issue. I see it as we're heroes. We're helping you. Nobody ever wants to pay a ransom. You pay a ransom because it's absolutely necessary. It's your company is literally going to go out of business and you can't move forward unless the ransom is paid. It's the absolute last resort that you can possibly do. It's not, oh, let's just pay the ransom and that's that. It's not a willy-nilly decision that's made. It's necessary. Your entire company is down, your systems are encrypted, your backups are encrypted, and you cannot move forward. So it's a necessary thing that and I think I wouldn't say we're fueling anything. I think we're helping, but I apologize for that digression.
No, because now I want to interrupt you and give you some stats. So for the 2020 ransomware matters that we had come in our door, the ransom was only paid on 25% of the matters because it is the last resort. It is not what organizations want to do from the get-go. Nobody feels good and warm and fluffy inside about paying a ransom. So 75% of the time, our clients were saying, we're not paying. We're going to restore from backups. We're going to move on with data loss, whatever it may be. But then we dissected the reason for payment by organizations, and 69% of organizations had to pay because they could not become operational again without the key. So, but for the payment, they would not be able to operate on their information systems again. So it goes back to they're going to go out of business. They're going to suffer a massive business interruption loss. The other stats, it's 26% of organizations paid to obtain the key, but also have the data deleted by the threat actors, because ransomware has evolved, just as the cyber insurance market has evolved over the past few years, where the data is not just being encrypted on the victim organization system. There's data that's being exfiltrated by the threat actors, and then the system is being encrypted, and then the threat actors use the exfiltrated data to apply further pressure to the organization that payment should be made. So sometimes organizations need the key to become operational again, but also want to receive a promise. Again, it's from a criminal, but a promise that the data was being deleted. So I think those are just some interesting data points for everybody attending this conference today. But Jeremy, I'll turn it back to you to talk more about the pre-event offerings that carriers have out in the marketplace.
Yeah, sure. So, that's just another service that's provided by your carrier. And I think it works two ways in terms of just, I guess, more on the underwriting side and then more on the claim side. But in terms of the underwriting side, we would provide to you services before there is a breach. So we can put you in touch with various companies that will work with you, whether it could be a law firm or a forensics firm. You can do tabletop exercises where you literally run through what would happen if there's a breach. That's something that's extremely important, and most people don't think about. Again, if you have a lawsuit, it's not the scariest thing in the world for a company. Okay, you have 30 days to respond with an answer. You hire an attorney, your in-house counsel can handle it. This is something you've never ever experienced before, and so it is absolutely imperative that you have not only a plan in place, but you've literally run through the plan and tried it. So that's where your claims team can come in. And The first time you speak to your claims team should not be the day you have a breach. It should be before you have the breach. And we're always happy in claims to speak with you in terms of how this would work, whether it's what attorney are you going to hire, what forensics firm are you going to hire, what notification firm are you going to hire, who from your company is going to be dealing with this, who's going to be handling my claim, who do I call, do you have a 24/7 hotline? This should all be done beforehand because we've seen time and time again, a panic and things can go awry. Again, not every insured is a major corporation. And so a major corporation likely will be able to handle it on their own without calling us. But the small mom and pop shops, the small municipalities, or just a business with 30, 40, 50 employees, they're going to be in a huge panic and not know what to do. And so if they can get in touch with their carrier before there's ever a breach, it's extremely helpful. And additionally, we can help with having firms come in to take a look at your system to see where there's vulnerabilities. How can you make things better? How can we avoid the breach? It behooves the carrier and it behooves our insureds for them never to have an incident. And so we're there for you before there's a breach as well.
Scott, I know you provide coverage counsel services to organizations that have experienced an event and may have a dispute with their carrier, but you are also sought out by organizations that are looking to buy cyber insurance in the first place, and you help them guide the decision. So what kind of distinguishing factors do you see from your perspective that make some of the carriers stand out over others?
Sure, it's the breadth of coverage and what add-ons they're adding. And so a lot of things that Jeremy talked about are endorsements, which are things that are added on. So clients will look and say, well, this carrier is offering $10 million of coverage for X premium, and this carrier is offering $10 million for Y premium. Why wouldn't I go with them? And so one of the things that is a best practice, not giving legal advice, of course, but best practice to look at is what is the breadth of the coverage. And so cyber insurance, you've seen one cyber insurance policy, and what's offered through Michael's company and through Jeremy's company is not the same, and even across policyholders. So for example, does the policy offer things like coverage for bricking? And so if your systems are all shut down and you find that from ransomware that you can't restore them or wouldn't make economic sense to restore them, is that carrier offering you coverage for that? Is the carrier offering coverage for social engineering fraud losses and things along those lines? And there can be other points that are more refined within the policy. What choice of law are they talking about? Where you think, hey, that shouldn't be that big of a deal, but it can be pretty essential where some states say that they will not allow coverage for punitive damages. Other states say it's totally fine. We're not going to prevent it. And how is the carrier looking to that? And so these policies are not standardized or continuing to evolve. And so understanding what opportunities there are to get improvements to coverage offered by the carrier is not a well understood thing for buyers. And for brokers, a lot of brokers understand this, but not in full. And virtually zero brokers have been through coverage litigation and understand how some of the subtleties play out.
So let's talk about the role of cyber insurance in the incident response process from the service provider's perspective. Sean, I'll turn it over to you.
Thanks. And I wish I could get on a pedestal and start talking about what Michael's working on in terms of the legislation that some entities are proposing with regard to making it illegal to pay ransom. If you don't mind, I'll spend 17 seconds on that, and then I'll hop right into it. But coming from a federal law enforcement perspective, it's hard for me not to think about the conventional kidnap ransom that occurs. Say somebody literally kidnaps your child. Are you literally going to make it illegal and cause that father or that mother to commit a criminal act to try to do whatever they can to get their child back? And if you take it into our digital environment where you've got a business that may have the livelihood of 100 or 1,000 or 10,000 employees and their families that rest upon the revenue from that business, and the malicious actors shut down that business, shut down that revenue stream, are you really going to make it illegal for the business to try to do everything they can to protect their employees to get that revenue stream back, especially when they're working side by side with the FBI and other law enforcement to do so? The answer would be, I think foolishly, we would forget about what the bigger picture is here. And at the same time, we would shut down a lot of the federal investigations we currently have going with regard to trying to attribute that activity to malicious actors, because you're making the evidence that would otherwise be available completely non-existent. So yeah, I'll get off my pedestal there, but let's say I have a position, and Michael, thanks for what you're doing on that regard. With regard to instant response services and the relation to cyber insurance, I come from an information security background, and so to the extent possible, I want to do what I can to enhance a client's security posture. But unfortunately, you can only mitigate so much risk technologically, right? Regardless of how robust your information security program may be, whether you're a Fortune 50 company or a small tech startup, the bottom line is you're always going to have what I call residual economic risk. And that's where cyber insurance comes into play. And like Jeremy said so well at the outset, cyber insurance is not a bucket of money. It's not just some form of financial remuneration or reimbursement. It's often comprised of a variety of services and service providers, all of which have actually been vetted by cyber insurers to assist their insured to get from one side of an incident to another. Whether it's a stolen laptop of a human resources director and looking at all the onboarding information of employees and what to do there in terms of notification or other protections they can provide for their employees, or a catastrophic encryption attack. What about all the expenses that are incurred by a company to get from one side to the other? And so with regard to the economic risk, I typically break it down into 4 buckets. And it's really, I'm looking at, okay, what can be directly mitigated by cyber insurance? And the first bucket would be first-party expenses. And some of you touched on it so well before, and I'm sure other panels have as well, but that would be like corrupted software, damaged hardware, money that walks out the door due to a fraudulent wire transfer, or ransom that's paid after a ransom attack for a decryptor tool to get yourself operational again, or a ransom that's paid to limit the posting of sensitive information, like Jennifer referenced, that's been stolen prior to the execution of an encryption attack. All of that would be categorized, at least in my mind, as a first-party expense, so we'll put it in that bucket. All of those would be coverable expenses, right, depending on the cyber insurance product. The second bucket are what I call third-party expenses, and typically that will be a number of things, but we often see it in, say, consumer or financial class actions, and they can be very expensive very quickly. And again, that could be covered. It's a coverable expense, if you will, depending on the cyber insurance product or the insurance product. And then the third bucket I see are remediation expenses. And the remediation could be remediation to a system like the forensic services provided, the restoration work that need to be done that used to be called betterment. Now it's actually typically, well, let's just say there are cyber insurance products to cover that. Or remediation to consumers, like the notification process, if their sensitive information has been acquired without authorization, and perhaps credit monitoring services or other services that we call consumer remediation services. And my philosophy is always, and I guess what this is borne out in the statistics, that the more you invest and the better you do your remediation, especially to consumers, the less liability you have from a third-party perspective. And so we really want to focus on that. But again, it's another expense, and it's another area that is typically covered by your cyber insurance products. And then fourth, and this is an area that a lot of businesses don't think about, are fines and penalties. And oftentimes they don't realize that they may actually be subject to fines and penalties. Even if they're not in a highly regulated industry, they don't realize that oftentimes our data breach notification statutes may trigger a state AG to inquire about their security posture. And what they're looking for is a deficiency in a prong under their Unfair Trade Practices Act that all the states will have, suggesting that if you're not spending enough money on your information security program, perhaps you're gaining an unfair competitive advantage against your peers. Or if you've had a data security incident, they might suggest that you didn't spend enough money to protect your consumer information and are therefore engaged in some sort of deceptive practice, right? And so out of the blue comes some fine or penalty from a regulator that a business had no idea that it could result. But again, it's another area that might be covered by cyber insurance. And it's really a matter of making sure that you've got good policies, a policy or multiple policies that cover the incident response costs. And as we might talk about later, oftentimes it really does come down to making sure your broker is well educated, well versed, understands what is actually out there in the industry, the industry trends right now with regard to the dangerous actions that are taking place all over the place to cause these types of expenses and the type of coverage that might otherwise be available. All this to say, I guess, is that with regard to instant response, essentially everything that it takes to get a business to responding to and operational from a data security incident ultimately is potentially covered by cyber insurance. And generally that would be outside counsel legal fees, incident containment, which might include the deployment of endpoint monitoring, those costs associated with that, digital forensics investigative costs, system restoration costs, as well as the consumer remediation costs like notification and credit monitoring. Essentially everything required to get a business from one side of the incident to the other. And so it really comes down to placement with a good insurance product or multiple products coming together. Did I answer the question, Jennifer?
You absolutely did. Thanks, Sean. Thanks, Sean. All right, so we have 5 minutes left in the session, and I think it would be great to end it with some war stories and some closing remarks. So I'm going to give everybody 1 minute because I know everybody's going to go over a little bit. Jeremy, why don't we start with you?
Sure. So war stories, I could probably go on for an hour. That's the fun part. I guess the two that come to mind is that, I had mentioned earlier that, we have a panel of firms that we're comfortable with, but inevitably many of our insureds want to work with a firm they've been working with for many years. So we had one claim whereby our insured wanted to work with a particular firm, and we looked them up on the internet, and they were a trust and estates law firm. And we're very flexible in terms of, should there be a law firm that's capable of handling the breach, that we would certainly agree to them. But in this case, we said, listen, it's a trust and estates law firm. There's no way they have experience in this. We really recommend you working with someone, that we've worked with numerous times. And they said, we'd really like you to reconsider. A few days passed, they call us up and they say, can you look at the website again and just, let us know. And this time the attorney had said trust and estates, cyber. And they said, true story. And then one other quick one I will mention. This one literally could be in a movie. Essentially what happened was when you talk about a ransomware payment, it's facilitated through, in conjunction with the carrier and the law firm and the forensics firm and perhaps a Bitcoin negotiator. The insured does not have to deal with this themselves. But in this particular case, our claims handler was on the phone and said, okay, we're going to go ahead and work on the payment. And they said, oh, no, we're already set with that. And the claims handler said, what are you talking about? We're set with that. And they said, someone from our company is going to be meeting a Bitcoin broker at a rest stop on the highway. They have a duffel bag full of $50,000 cash, and they're gonna do it that way. And we were in an absolute panic, but miraculously, it actually all worked out. It was legit. But that's a story I'll never forget.
Awesome. Sean, how about you?
I guess similar to you, Jennifer, our team handles thousands of data security incidents on an annual basis. And recently with these industry events, SolarWinds and then the Microsoft Exchange matters, you're handling 75, 80 data security incidents a week. And the vast majority of those clients have good cyber insurance products. And so typically the process is just seamless. But recently I've had a couple of clients where, and I guess this is part of the education. It's not necessarily a funny story or anything like that, but it goes back to lack of education in the industry with brokers. And I've had a couple. One was a very large financial services firm. Another was a much smaller company, but part of our critical infrastructure. And in both situations, the broker thought that a crime policy would cover everything that emanated from criminal behavior. And therefore, there wouldn't be any need for cyber or ransom kidnap or any other component policy. And so as a consequence, in one situation, it was a very large ransomware matter with large ransom payment, all that kind of stuff. All of a sudden, all of that stuff had to be paid out of pocket because a broker failed to apprise himself of the industry trends in the evolving insurance industry, even though this is very well respected individual in a large metropolitan area, but he didn't know cyber. And similarly, with regard to a critical infrastructure firm, again, a key part of the, I'll say the energy industry, to anonymize it. But once again, their broker didn't recognize that they might have some sort of an incident that could cause them catastrophic harm and didn't think that cyber would have anything to do with it as opposed to a typical property casualty. So it's one of those things where we see that from time to time. Fortunately, we just see just a smaller percentage of the time, but it can have catastrophic consequences.
Great. Scott, how about you?
So I was at a dinner after one of these events and sitting around with a lot of sophisticated incident response counsel talking about what they do. And, I'm always the odd man out at these things. And a woman says to me, after talking about her plans and how she knows these things, she says, where should insurance even fall in my incident response plan? And I said, literally your first phone call. And if you treat them like an HMO, where you're asking them for permission to see any doctor, do anything, and talk to them first, your life will be much easier. And she was both perplexed and pleased that she'd gotten the advice about that. She hadn't thought about it at all.
Michael, how about you?
All right, very briefly, take care of an incident response expert. Like many of our audience members, this has been an extraordinary time. So, write a card, bake a cake. It's been an extraordinary time, and I thank all of them for their service.
Great. And Bruce, I know I'm running out of time, so I'll just close with a positive story. So a few weeks ago, I was contacted by an organization that experienced a ransomware event over the weekend, and they tried to muddle through it for the first few days and then called their broker. And they had gotten pretty far down the wrong path by the time it came to us. Yet we got it to the carrier. We were able to get panel approved firms involved, and we were on the right track within 24 hours, which was fantastic for the organization who was able to get the right people involved, approved by the carrier, to become operational again and also keep the threat actors at bay. So cyber insurance does really play a great role in the incident response process, and I hope everybody takes that away from today's session. Thank you, Bruce. I'll turn it over to you.
Thank you, Jennifer. Great job. And Michael, Jeremy, Scott, and Sean, thank you for a terrific final panel on a really important topic, but very, very, very helpful. Thank you. That's our last panel for the day. In a minute, we're going to cap off the day with a very brief announcement of our incident response 40 list. A couple of quick thank yous before we sign off. Thank you again to John Stark. You wouldn't think that introductions would be an art form, but as we've learned, there are levels. There are levels to these things. And as attendee Kelly McCarthy labeled him, he is the Beyonce of event introduction. So congratulations, John Beyonce Stark. And great master of ceremonies today, but also an invaluable partner in planning today's event. Thank you, John. And thank you to everyone at Kroll for being our lead sponsor. We really appreciate it. I'd also like to thank our friends from Ankara, CrowdStrike, Crypsis, FTI, John Reed Stark Consulting, Resilience, Sard Verbinnen, Stone Turn, and Strauss Friedberg, and of course our lead law firm, Oric, and the 22 world-class law firms that are represented here today as sponsors and participants and supporters of this event. Thank you. And to everyone here, some of you have been here from 8:30 in the morning in Australia, around the world, throughout the United States. Thank you so much for staying with us. I hope you will, oh, by the way, the chat today, tremendous. I agree with one of the comments. I wish there was a like button in the chat. Hopefully Digitel can create one for us for the next time. That was a lot of fun, very lively, very informative throughout the whole day. But finally, just stick around. In 3 minutes, we're going to announce our Incident Response 40 for the year 2021, which is our list of the best lawyers in this field. I hope we'll see you in now 2 minutes. Thank you.